Welcome back to our NextGen Q&A series where we provide basic personal financial information. It's basically all that stuff that they should have sat you down and explained to you before they let you out into the real world. That's what we're covering here. And we've been covering the topic of home ownership, especially for first-time home buyers. Now we have a couple of videos already out. Should you buy a home? Are you ready to buy a home? How much home can you afford? So let's say you've watched those, you've kind of done your due diligence and you think, okay, I think I'm ready for this. Today's video will be a very practical kind of step-by-step guide to the home buying process. And to assist us with that, I brought in an expert, Mr. Jordan Kennedy. Jordan, appreciate you joining us.
Hey, glad to be here. Pleasure's all mine.
Absolutely. So Jordan is actually, he's my realtor. And so he's assisted me on purchasing a couple of properties. Jordan, you know, like I said, we'll kind of walk it step by step for folks who are maybe approaching the home buying process. But before we do that, I thought we'd just kind of have you introduce yourself and kind of give your background in the industry.
Perfect. Yeah. I mean, so Seth, I've known you for a while now, but got into the business in 2015. I've been doing this for about 8 years now, and this is all I do. My background prior to real estate was business to business sales, which I did for about 10 years, as well as doing a little bit of marketing for a lender in town.
Okay.
And so the move to real estate was a pretty seamless transaction. Once you go from doing business to business sales to real estate, it's a pretty smooth fit.
Okay.
Really
And I
is.
actually didn't know that you had a background kind of in the lending space as well.
I did.
So that must be helpful for what you're doing now.
The lending side of it really kind of got things kicked off. I can look at people's tax returns, kind of know what they're looking for. I could sit down and even all these years later, look at someone's tax returns and tell whether they can afford a property or not.
Sure.
So that piece of it really did give me quite a bit of experience and was a good launching pad for doing this side. And I will tell you, the real estate side is definitely, in my opinion, more rewarding and more fun than the lending side.
Okay. Yeah.
I'd rather go look at properties than analyze Seth's tax returns.
Right. Well, I'm
So-
sure there's lenders who would probably take the other side. Hey,
Yeah,
to
they
each his
would.
own, right?
They
Yeah,
would.
That's
They
great.
would. Absolutely.
Okay, so 2015, got into the industry, and then kind of what has been your experience over these 8 years? I mean, do you have like a niche or, tell us about kind of your background now that you're in the industry.
So I would say in the 8 years I've done this, I would say about half of my deals have been in the Dallas area alone, but I go out as far as Fort Worth and hit some of the surrounding areas, but I specialize a lot in first-time home buyers. And I even do quite a few VA deals. Now, VA deals can be a little bit tricky. A lot of agents in the area will tend to shy away from those because it's 100% financing. But those are really my two specialties, I would say, first-time buyers and then VA transactions as well.
Fantastic. VA transaction, of course, for people who don't know, is for veterans, right?
Veterans.
For the special type of financing
Yep.
to be able to do that.
And it's one of the few 100% financing products. So if you are a veteran, it is a fantastic product. And I know how to navigate that from start to
I'm
finish.
sure there's all special regulations and
Sure,
yeah.
there is.
Okay.
There is. I know those regulations top to bottom too.
Well, and that's fantastic too that you specialize to an extent in first-time home buyers. So I think we're in good hands here
Yeah.
for today's purposes.
Definitely.
So let's do this. So someone is ready to buy their first home, never done it, doesn't know all the terms and terminology, and maybe a little bit nervous. What would you say is kind of their starting point as far as getting that started?
Fantastic question. I would say for anybody that wants to get started, first thing you want to do is find out how much you can afford. To even take it a little step further, kind of figure out where you want to be.
Okay.
Hey, I want to live in Allen. Hey, I want to live in Frisco. Hey, I want to live in McKinney. No, I want to be in Dallas. But the first real step is going to be to sit down with a qualified lender and say, hey, how much can I afford? Because you don't want to just start looking at properties without knowing what you can afford. If you're looking at $400,000 homes, $450,000 homes, and then you find out, you know what, I can only afford $350,000. It kind of gets your hopes up and can really make it a little bit more of a painful process.
Okay, we're already starting to see some complexity here because I heard as part of your answer kind of 3 different things: a geographic area, price point, and lender as far as how much you can qualify. And of course, those things kind of triangulate to answer the question of, where to start. How much you can afford impacts what part of town you can live in. And of
Very true.
course, what
Very
you can
true.
qualify for a loan impacts what you can afford as well. Okay, I mean, that kind of gives us the landscape. Of course, we do have a separate video, as I mentioned, how to help determine how much home you can afford. Okay, So they kind of maybe you already mentioned a lender. Could you speak to that piece as well? Kind of how do you find a lender? How does that work?
Well, I've got a lot of good lenders that I can refer people to.
Would you say it's common for most realtors to kind of have a close working relationship with a particular handful of lenders? Okay.
Absolutely. I would say that I have 3 or 4 that I use pretty regularly. Then I have another guy that I send everything that's VA related because he's got 20 years of VA experience.
Okay.
So I've got different lenders
Depending on the
different
case.
things. Exactly.
Gotcha.
And I try sometimes to refer people based on personality wise. Hey, they're going to hit it off with this lender a little bit more than this one. So,
Okay.
But I have between 3 and 5 people that I like to use or refer whenever someone comes in and says, hey, I don't really have a lender yet. The one thing that I would tell people not to do is you look at your Wells Fargos, your Chases. Those places are great whenever you have a bank account or need to get a credit card, but I would just be a little bit more careful on working with one of them on the mortgage side because they're not quite as equipped to handle as one of the local lenders are here.
Okay, so your take after doing this for 8 years is typically kind of a smaller local lender is a better bet for most people. Okay.
Yes.
And so that big first step to determine how much you can afford, what's kind of your target neighborhood, so to speak. And so you mentioned one resource to find a lender and find how much you qualify for in terms of financing is a referral from a realtor. How does someone find a realtor? It's like the chicken or the egg thing. I think about it from the perspective of someone going through this process. They don't know anybody, never done this before. So they're trying to find a realtor, but also kind of evaluate. What should someone look for in a realtor? Maybe what are some red flags, right? If you're evaluating someone.
Great question. I would say the most important thing when you're evaluating which realtor you want to work with is look at the communication piece. I hear it time and time again. There's a lot of market data that says that people's biggest complaint about a realtor is the lack of communication. And I know that sounds pretty basic, but if that realtor is very communicative and knows the industry and knows the different trends, then you're in good hands.
Okay, so communication. So if you reach out to someone and it takes, days for them to get back to you, maybe that's not a good sign.
I would say typically it's not. Like for me personally, I have it set to where if someone leaves me a voicemail, I return their call within 2 business hours. And most of the time I return it within an hour because I really don't like leaving voicemails on my phone. But I would also say another piece of that is finding that realtor that does this full time. When someone's a part-time realtor, they have a 9-to-5 job, and this is something they do a little bit on the side. It's like a hobby. You're probably not going to get the expert knowledge that's needed from the person that's doing it full time. And years in the business is also huge. There's a stat that says that 87% of realtors don't make it 5 years in this business. 87%. So you're a numbers guy. Think about that for a second. You've got 100 people in a room. 5 years from now, there will be 13 of those people still going. I've exceeded that 5 years and doing very well 8 years in the business.
Yeah. Okay. So maybe that's a good, cutoff, right? If you're going, hey, survival of the fittest is a tough industry, markets change. And if they made it past the 5-year point, they're highly responsive in their communication. And then what was the other piece? It was the responsive.
The communication piece. I can't stress that enough.
Yeah.
If someone is communicating with you and you don't, like you just said, if someone calls you at 8 o'clock in the morning and then they don't return a call till 5 o'clock, may not be a great fit for you.
That could be the difference of a deal closing
or not. It could absolutely be the difference in a deal closing or not.
Yeah. And then the other piece you mentioned was full-time. Full-time is a good sign, right?
Yeah. Full-time definitely is.
Okay. So someone's determined how much they can afford, what their target neighborhood is. They've located a lender. They've located a realtor. Sounds like we're ready to start looking for some different properties to make offers on. So what does that property search look like? What should a first-time home buyer expect kind of from their realtor at this point in the game?
That's another great question. And one of the things I wanted to mention too is, when you're going into this process, you don't have to put 20% down on a property to purchase it. And I get that question at least once a week to where it's, Jordan, I'd love to buy a place in Frisco, but I can't afford 20% down on a $500,000 home. And the beauty of that is when you sit down with that qualified lender, you may only need to put 3% down or even 5% down. So you look at the different loan products. We had mentioned VA financing. That's 100% financing. So, but again, you have to think about what's your monthly payment going to be.
Right.
When you're doing a conventional purchase, which is what most of these will be, you can do as low as 3% down on those. Now, again, 5%, they tend to give you a little bit of a better interest rate. The fees long-term tend to be a little bit better at 5% versus 3%.
Okay.
Now, if you do FHA financing, which is also common, but I'll tell you if FHA financing is, you're looking at 3.5% down as the minimum. You're gonna be paying private mortgage insurance for the duration of the loan there.
Yeah.
But people don't need to be going into this with a huge wad of cash to buy a property. And I think that's the best part.
Sounds like that's probably a common misconception.
It is.
I can't afford to, 20%, there's no way, right? So kind of a case in point as an aside, and we see this in our industry in financial planning all the time, is consumers, just like all of us, you don't know what you don't know, right? And so you may be going into this process with this misconception that you view as a constraint, and by simply reaching out to a professional, you can get that clarified, right?
Absolutely. I think you nailed it. You don't know what you don't know.
Yeah. Okay. So it sounds like 3 to 5% is kind of like table stakes as far as a down payment getting into the
Pretty much.
process.
Pretty
Okay.
much.
Good
Now,
point.
if you're submitting an offer on a property, and one of the things that we've been dealing with now for the last couple of years, and you've probably heard a lot about this, is multiple offers. Now, if we're looking at a property and there's 5 people making an offer, including your offer, the more you put down is going to probably set you apart from the rest of the pack. If you're doing that 20% down instead of 5% down, it's going to be a little bit better for you. In that offer, you're going to be standing out a little bit more to that seller.
Money talks, right?
It does.
If you're making
It
that
absolutely
offer
does.
it's a competitive market. All right, great point. I'm glad you kind of took us there and made that point here. But so let's say it's time to search for properties that fit the bill as far as geography, price. Kind of talk us through that piece of it.
So what I like to do is I like to sit people down, and I have a sheet that I run through that's got a lot of different options. It's basically your must-haves. And the goal for me is, if I'm talking to Seth and he says, Jordan, I've got 5 sports cars and I need to have them all garaged, then we need to have a serious conversation. I've had that conversation with people.
Yeah.
To where we're going to need to get you a bigger property with the garage space. But I like to go over the must-haves. If someone says, hey, I just need, a 3-bedroom, 2-bath, 1,700 to 2,000 square feet, here are my parameters. The more flexible you are on what those options are, the more homes we'll be able to find.
Okay.
But I like to really nail down and say, okay, I know you want to live in Frisco, or you want to live in Plano, Collin County, whatever that is. But I like to know, hey, how much square footage do you need? What schools are important to you?
Right.
And once we, some people say, hey, Jordan, I only want to live in a 1-story home. My knees are not great. I don't want to have to go up and down, 3 flights of stairs.
Yeah.
So once we get clear on what I call must-haves are, then we really dig in and start to really get after the process. What I tell people is I will match your intensity. If you tell me, Jordan, I need to be in a place within 2 months, we will hit it very hard to get you into that house within the next 2 months. If you tell me, hey, my lease is up and I have 6 months to go, well, we're going to probably not be quite as aggressive. But I also like to find out, hey, you're 6 months out, Seth. So if the right property pops up in 2 months, will you be ready to pull the trigger?
Yeah.
And if we're on the same page there, then we'll get after it.
It sounds like your approach is kind of to help clarify really what the ideal outcome is in terms of the property itself, the timeline, really just getting hyper focused on that.
Absolutely.
And then going out and getting after it.
Absolutely.
Okay.
But I find that once we're clear, once I know exactly what they're looking for, then we can really get after it.
Okay. And what does that look like? So, someone engages you, they got a lender, and then, we're in the searching process, but I'm going about my daily life. I'm still going to work. What should I expect as far as how does that work?
So what I do is I look at the MLS every morning, and I know.
Could you help us with that term?
Yeah. So MLS, yeah, I'm glad you mentioned that. So the MLS is the multiple listing service.
Okay.
That is the originating point for every property that's on the market. So people will get on Zillow or Redfin or Trulia, and they're browsing stuff. They're looking at their phone. They're browsing different properties. The multiple listing service is where all of those properties originate from. So you're not going to really see anything on those websites without it going through that MLS process first. So from there, when I set someone up, they might say, hey, Jordan, my max affordability is $400,000 in the Plano area. And we're going to be looking at West Plano, although West Plano is one of those areas where things are a lot more expensive than 400,000. But once a property comes up that matches their criteria, they get an email within a couple of minutes of it actually hitting the market.
Okay. And that's automated.
It's automated.
Yeah.
It is all automated. And so what we do is whenever clients and I will text pretty heavily back and forth, and I get all these things on my phone. I know when new stuff hits the market all the time, but then we will schedule a time to go look at that property. Okay. One of the things I like to do is I like to call that other agent first and say, hey, I know you guys just hit the market. Today's Friday. This is day 2 on the market. and I like to find out a little bit about the property first, find out about the sellers and see if they're going to have any type of deadline. Because if a property is priced correctly and it's in a good area and it looks nice in this environment, in this market, it will have multiple offers. So I'm doing my client a disservice if I don't find out, okay, hey, they're putting this thing up on a Thursday. It will probably have 10 offers by Sunday. The deadline to getting an offer in is Monday. So you may have a client that, this thing hits the market on a Thursday night. They're out of town until Sunday night, but we know we have until Monday at noon to get an offer in. So we have time to go out and look at the property and kind of and game plan for that.
Okay, so it sounds like if there's a property of interest, kind of one of the values that a realtor should bring is kind of this back channel of communication with the listing agent.
100%.
Right? What are those other tidbits and some unknowns about the property that should be uncovered?
Yeah, I mean, and what we look at too is every property in Texas has what's called a seller's disclosure that goes with it. I try to find out what I can. Hey, this house was built in 1978. They redid all the plumbing. Hey, the foundation needed 40 piers. And that's what in Texas, foundation repairs are something that comes up quite a bit. We see it a lot. And I always tell people, especially ones that are moving here from other states, hey, our soil here is kind of a clay-like substance. It's a little bit wonky. And so we see a lot of properties that, and we joke about this, we say there are two types of properties in this area, ones that have had foundation repair and ones that will.
Right.
So
right.
It's one of those things where sometimes
it's a matter of time.
Exactly. Like my folks, when they first moved here, and keep in mind, this is going back 30 years, way before I was ever in real estate. But they used to think, if they heard that something had foundation repair work done, that it just wasn't a good house. And that's not the case.
Right. Yeah.
And one of the things that we do, Seth, is if we know that foundation work has been done on that property, number one, we find out who the company is that did the work. Are they still in business? Do they have a warranty on the work that was done? And if we really needed to know how well the property is doing on that front, if you really wanted to know, we have structural engineers that went to school for that particular thing, and they can come out and look at the property and write up a report and tell you, hey, this place is pretty good, or hey, it needs some work, or hey, you know what? You may want to think about another property.
Okay, we're kind of getting into kind of the due diligence phase of if you really are getting serious about a property, there's some different kind of boxes you want to check depending on the specifics of it. You mentioned one thing I want to just touch on just briefly again, which is viewing the property.
Yep.
What are the different formats and contexts in which a client could view a potential property?
So we have a scheduling service that we go through. It's automated as well. I call a number, or I can get online and input the information, and it will basically give us time blocks to go in and look at a property. You'll find that anybody that's living in a property usually is a 1 to 2 hour notice. So if I'm going to look at your house, Seth, and I'm bringing a client and I want to look at that house at 3 o'clock on Thursday afternoon, usually I need to have that request in by about 1 o'clock, maybe 2 o'clock of that exact day. If it's a lockbox, we either have a code that we can get into, or, I was going to show you my cell phone. I've got an app on there to where you see these blue boxes on a door. It's called a Supra. That's where the key is located. So I use my phone, and it's a great piece of technology. And that Supra will open that lockbox, and we can go in and take a look at the property.
Okay, so you could view it with your realtor, right?
Yes.
They would schedule all that.
Yeah.
We also hear this, seems like you're driving around and you see signs for an open house. For someone who doesn't know what that is, what's an open house?
Okay, so an open house is more or less a set time where it's going to be wide open to the public. Most of the time you see an open house, you'll see the occasional person that will do it on a weeknight, but 99% of those open houses are done on Saturdays and Sundays, kind of in that 1 to 3 p.m., 2 to 4 p.m. block. It's a free-for-all. It's, hey, the doors are open. We've got food and drinks in here, and people can come through, bring their entire family, and not really feel the pressure of, it's, hey, I'm curious about this property. I'm not quite sure if I want to purchase it or not, but you can come in during that time. It really is a great way to view because you don't actually have to have your realtor with you at that moment.
Okay. So you can do an individual viewing with your realtor. You can do an open house.
Yeah.
So let's say you find the one, right? If there is such a thing. And you go, I want to make an offer on this property. Okay, how does that work? All right, so how would a client make an offer on a property?
Great question. So to make that offer, it's number one, we're going back to the lending piece has already been squared away. One of the first things that I do is I call that listing agent and I will say to them, okay, my client loves this place. Are you working anything right now on this property? Yes, Jordan, I have one offer. Okay, well, today is Thursday. Once they get that second offer, what typically happens is it becomes multiple offers. Anything with more than one offer becomes multiple offers, and they will usually set a deadline for usually 48 to 72 hours from that point. Now, with the multiple offers, they do basically what they call highest and best, to where you put your best foot forward. So if that deadline is, say, Monday, then you need to have your offer in before that deadline if it's 12 o'clock Monday. Now, again, when you're dealing with different agents have different ways of doing things. But you just need to have your offer in at that point. Everything that we do is basically DocuSign. So I can sit on my computer and I have templates and I can fill out the paperwork and have it done for you, Seth. You see a property that you want to purchase. In about 20 minutes, I can write up the entire offer. We go over it, you sign it electronically, and I can have it submitted to that other agent. So once you do this for a while, you get to be very, very quick, fast.
And you got to be, right?
You do.
Okay.
And a lot of what we're doing is, these are actual Texas Real Estate Commission forms. So a huge portion of it is us filling in blanks.
Okay.
Sale price, amount down, what day do you want to close? Are you asking for a closing cost assistance from the seller? Those kinds of things.
Okay. So you craft a competitive offer, you make it in a timely manner, and then what?
I also have my lender call to say, hey, my client Seth, he's a fantastic client. We're able to close very quickly. And he basically sings your praises about how quick and easy this process is going to be. That's music to a listing agent's ears.
Oh, sure.
If I'm on the listing side and I hear, hey, Seth is going to be buying this place and he's rock solid, we can get done in 20 days. I'm like, boom, that's great.
So when the lender or the realtor says, yeah, this is a rock solid client, are they referring to the strength of that application for lending? Is that primarily what we're talking about? Okay.
They are.
And so let's say, I guess there's really two outcomes. Either your offer is accepted or not, right? And so maybe for a first-time home buyer, I'm kind of thinking back to my first-time home buying experience. When you find the one and you commit and you make an offer, there's kind of this emotional piece of maybe this is going to be my next home. You start to kind of populate memories of, right? But that offer may not be accepted, right?
Yeah.
So how do you talk people through that of, hey, we're making an offer, but this is still kind of in the business category. It hasn't become your property yet.
I mean, that's a great question. And in some cases, Seth, we go into this and the client absolutely loves the home. They think, hey, this, I've got 5 boxes that need to be checked and this checks all 5 of them. So it kind of goes into that same category of, if we know there's 5 offers on it or even as many as 10, I sit them down and have a very frank conversation. We don't know what the best offer will be that will get the property accepted. And I look at everything as being basically a business decision. There's going to be times, especially in this environment, where you're one of 10 offers and the price to get that particular property may be going quite a bit over the asking price. So I always like to gauge their comfort level in doing that. If we know a property is listed at 400,000 and it's going to need to sell at 450 and you are not comfortable with that, then I'm always very reassuring. And I tell people this, and it happens all the time. This may not be the property for you and somebody else may get it, but we will find you another one. Yeah. There's a lot of homes in this area that can be purchased.
I want to highlight right there the dynamic nature of this whole thing. And I would just stress too, of course, I'm a financial planner, so I got to plug financial planning as a practice. At this point in the game, it's extremely important to have a clear visibility into your financial situation, right? So a living, breathing financial plan where different levers you can pull on, different funds you can access to close a deal in the context of a competitive housing market is extremely important, right? In this kind of back and forth process. But let's say the offer is accepted, right? So what happens then?
Great question. So when the offer is accepted, that's when the fun really starts.
Okay.
So you're looking at probably about a 30-day period, 25 to 30 days to close first. So what happens here in the state of Texas is we have an option period. That's the first thing that happens. So if an offer gets accepted today and you have, say, a 7-day option period, what that means when you hear someone say there's a 7-day option period is this is the time where you're getting your inspections done. You want to find out as much as you can about this property. And then during that period, we are getting all repairs negotiated. Now, those repairs don't have to be done during the option period. They just need to be negotiated. What I mean by that is there's really 3 steps during this option.
Okay.
We can lower the price of the home to compensate. So say we go in there and we know that the foundation needs some work. Maybe the HVAC isn't quite doing what it needs to be doing. The seller can either say, hey, we'll go ahead and fix these things by closing, or they can lower the price. So say they come in and they're going to drop their price $10,000. We get all that figured out during the option period.
So the option period, it sounds like there's kind of this due diligence period of let me really look into this property. You mentioned structural engineer, you mentioned roofer or whatever else other professionals need to come and get eyes on the property, and then you can kind of adjust the offer itself or the actual closing components to account for those different things that you discovered.
Definitely. And I always kind of compare it to going to the doctor. You go to see your doctor and you want to see a specialist. A lot of times your doctor is referring you to that specialist, correct? So it's kind of a similar concept in real estate. Probably not going to bring someone, I mean, maybe you could if you wanted to, but if we know the roof might be a problem, but the inspector says, hey, the roof really does probably need to be replaced, then we can bring in a qualified roofer to say, hey, does this roof need to be replaced or not? And then bring in the insurance company. Kind of treat it like you're going to the doctor and get referred out for the major components. And what I always like to really hit on, Seth, these inspection reports are very detailed. Sometimes you're getting a 30, 40, 50 page inspection. So what I always like to mention to new first-time home buyers is don't be freaked out when you see a 50 page inspection.
There's a lot on there.
There's a lot on there.
Yeah.
And when you see the details, if you're not as detail oriented, you're going to find that there's quite a bit on there, but don't freak out. And what we typically like to focus on, I like to call it the big five. It's your roof, your plumbing, your foundation, your electrical systems, and your HVAC. And then I like to put the sprinklers as an optional sixth. And if there's anything that needs to be repaired within those 6 components, that's where things can get very costly for you repair-wise. So part of what I do, that 8 years of experience I mentioned, is I'm very good at getting those repairs negotiated. If we have electrical problems, if we have foundation issues, we're going to get those things fixed before closing. Absolutely.
So, it sounds like, obviously you've made an offer. Your counterpart, right, the seller, they've accepted it, so everyone really is kind of in the same boat. We want this deal to close, we want this transaction to happen.
Definitely.
But there's some details that kind of need to be worked out. For a first-time home buyer, maybe this is something that they wouldn't realize, but should that home buyer actually expect to be involved speaking with the seller or anything like that? Maybe
Good question.
Something that people don't realize.
Great question. No, the buyer and the seller will not be communicating at all. That's what we're in here for. So I will be communicating everything between myself and that listing agent, but there will be no communication between the actual buyer and the actual seller during this process.
So work through all the details. Obviously, the actual client is communicating with the lender, right, to shore up any last details, paperwork, et cetera, and then you got a closing date.
Yep.
What should the client expect on closing date?
The closing date's usually 25 to 30 days from the point of execution. So once we get through that, we had mentioned the option period. There's a couple more things that we need to make sure that we get taken care of before that. Let's just say there's an HOA on the property. Now, if there's an HOA, it usually takes about 14 days to get the HOA documents. So stuff like that comes up to where we need to make sure that whatever the HOA rules are, their bylaws, are transmitted to that buyer within that 14-day period. And then we also have a finance period to where we specify, okay, if you're buying a property and we specify 20 days for financing, we need to make sure that whatever documents the lender needs are done within that 20-day period. And the last part before closing is the actual appraisal. That's where the fun really can be had, is if my client has purchased a home for $400,000, the appraisal is going to make sure that the home is at least worth that $400,000. Where things can get a little bit muddy is when the appraiser goes out and says, hey, this place is worth $370,000. It's good and it's bad. It's good in the sense that, hey, you're paying less now than you were before. It's bad, though, if that seller looks at you and looks at me and says, I'm not selling this thing for less than $400,000.
Right.
That's where things can get a little bit messy. Whenever that comes up, I always look at the listing agent and I say, hey, we tried at $400,000, it's worth $370, lower the price. And we dig our heels in.
And just to kind of translate for someone, right? So it's like, obviously the seller wants to sell it for what they think the market will pay for it, but the lender, they don't want to give a loan for something that's not worth as much as the loan is for, right? And so that's where the appraiser is kind of this supposedly independent party, right? To provide a independent valuation. Okay, so we get all that squared away, and then so closing date, right? They sign the paperwork and get the keys. Is that the gist?
That's part of it. So once all the steps have been completed, and again, it's I like to joke and tell people it's not a marathon, it's a slow jog for that 30-day period. But once everything is done, there's a closing date that's set. And for that buyer, I always like to laugh and say there's a stack of paperwork that rivals the yellow pages. Absolutely. But during the day of closing, the buyer is signing quite a few documents, quite a few disclosures. And then once that is completed, if they're bringing, $100,000 as their down payment plus closing costs, once they pay that, whether it's through a cashier's check or a wire transfer, then once everything is processed, that property becomes that of the buyer. And then you got everything completed at that point.
Time to celebrate.
Pretty much. So that's where the champagne comes in.
Absolutely. Okay, so I've got just one more question for you. May seem like a weird question, but keep in mind this video series is for people just starting out in their financial lives, right? So younger people. So I would like for you to just think of maybe a younger family member, close friend who's in that category. Imagine you're speaking to them, knowing everything you know, try and encapsulate kind of one tidbit, one pro tip. If they're headed into the home buying process and you have maybe the space of like a tweet and you can give them this one kind of sense of direction, what would you say to them?
I would say to anybody that's going in there and this is going to be their first property purchase is, have a little fun with this. Don't be stressed out. You're going to see a lot of stuff on the news. The news makes things sound like the sky is falling. I can't tell you how many times I've worked with an individual person or a family and they felt like the situation, like them finding the home that they want was going to be just like pushing an elephant up a hill. And every single time when they have had realistic expectation, we have gotten them into a property every single time without fail.
Yeah.
And I think once they get into that process, they kind of figure out, hey, this really is doable. It really is. So have a positive attitude, have a little bit of fun. I can't make it any simpler than that.
I love that, man.
Yeah.
I didn't expect you to say that. But at the end of the day, that's what we're talking about. We're talking about your home and where you live and your family and your memories and your life, right? Let's have some fun with it.
Let's have some fun with it. That's the most important thing.
Jordan, I really appreciate you joining us. And for those of you out there watching the NextGen Q&A series, check out our other videos. Feel free to contact us, contact Mr. Kennedy, and we'll get you fixed up. See you next time.